What's happening, traders? I hope you are well. As you can see, I have literally scrapped the zones from my chart. GJ has gone on a run. I'm going to take things from a fresh perspective, reframe a new map of where the potential is in the market, and come back to the charts in the next couple of days fresh. But in the meantime, I want to clarify some criteria that you guys can look out for your event 1, your event 2, and your event 3. So let's just dive in onto the whiteboard right now and let's get cracking. So what we're going to be looking at is event 1 to begin with. Okay, now from yesterday's video, the main thing that I told you to look at was to identify where you are on the curve to begin with. Okay, so let's say the market's moved down. This is now the low. Maybe we get some basing and then we get another push up. Then when the market decides to, we wrap some lines around this. When the market decides to come into this zone, then we look for our event break area. That gets broken. We then find our trigger and then boom, and the market goes to the upside. Okay. Now on the way down here, we could potentially have some areas that could potentially force the market back down. Okay, so what do? We then wait till the market goes in there. We either take off some profits, okay, and then we decide whether or not we're going to, if it breaks a level, okay, so market touches there, maybe it breaks a 15-minute zone, and then you want to decide, okay, fine, now that's broken, I'm going to take my profits there and then take the market to the next side as it hits that trigger and then goes back to the downside. Okay, but it's just recognizing where you are in the curve and understanding that if you're currently at the lowest part of the curve, then taking buys is the best option. If you're at the highest part of the curve, then taking shorts is the best option. Okay, now another thing to look at within your event 1 criteria is the level test, which can be quite important. It can notify you sometimes on certain zones. So sometimes when you see the structure, you'll see for instance, you'll see a bearish engulfing structure. Okay. But then what will happen is before, for instance, this decides to push to the downside, it will push up into the zone. Okay. And then decide to push to the downside and then get some candles going down. Then by the time it comes up back into the zone, we've wrapped some lines around this now. Okay. Then when the market pushes back up into the zone, we then play our event break structure that gets broken. Then we have our trigger to then take the market further to the downside. So this right here is our level test. Okay, so look out for those because sometimes they kind of like give a signal that this zone has some orders behind it and you should definitely be paying attention to it. It doesn't happen on every engulfing structure, but it does happen. So when you see it, just make sure you pay attention to that. So those are the 2 criteria for event 1. Let's move on to event 2. Okay, so event 2 now, event 2. So the first one is friction, okay? So we know that the markets, this is the event 1 zone, okay? And the market's pushed into here, right? So now it's coming down. We're looking for that break before we can find the trigger. All right, so let's zoom in into this, right? So this is now the zone, okay? And, sometimes you want to qualify your own rules within the event chain. So you may say to yourself, okay, so if my event 2 doesn't get maybe 2 points of friction before it breaks, I'm not going to trade it. Or maybe you're going to say, I need 3 points of friction and then a break for it to qualify for that trigger event above, okay, when the market decides to return to it. So this is the beautiful thing about the event chain, is that you can qualify and quantify your own rules within the event chain, create your own system, thereby having the confidence to take trades as they fit your specific parameters. Okay, this is the beautiful thing about it. I've given you a framework and you can just simply build on that. All right. Now, the second part of this is the actual break itself. All right. So sometimes this is event 2 now, guys. Yeah. So we've got event 2 happening right here. Right. Now, when the market decides to break through, do I clarify this as a break? Hell no, that's not a break for me. Okay. Is this clarified as a break? For me, yeah, I'll take that. Let's just extend this a little bit more. Is this clarified as a break for me? Yeah, definitely. I'll take that. There is no definite amount of pips to clarify a break. But again, you can set up your own rules, right? So let's say we've got a zone here, event 2, and this one breaks it by, say, 3 pips. Okay, this one breaks it by, say, 7 pips. This one breaks it, let's say, 10 pips. And let's say this one breaks it by 15 pips. So if anything below 7 pips, right, this is not a break enough for you. But anything that goes 10 pips and below, you're on fire. That trigger event above, you are going to go in there full lot size and, you're going to play that. All right. So you can use your own rules again within the event chain to set up your own specific parameters. Because for me personally, I don't have this. I just take an eye and I think, all right, that's a good enough break for me, but maybe I should do this. But I'm just telling you that this is some criteria that you can actually set up for yourself to help you qualify zones further. All right. So that is event 2. Let's go on to event 3. Now, the main thing with event 3 is structure. All right. That is the main thing with event 3. We want to see good structure. All right. Now, when it comes to structure, we want to see number 1, we want to see either an engulfing structure, either bearish, okay, or bullish. Okay. Now, is this structure something that I could play to the downside? Yeah, of course. That can work. That can work really well. Okay. Is this structure something that I can play to the downside? Hell no, because look at this proximal line. That's just not on the basing area here or below it. Like that definitely can't happen. Even if it was here, I'd be very suspect. It would have to be at least here, okay, for me to actually think about this playing this when the market comes back into that zone right there. All right. So making sure you're paying attention to structure is the most important thing. And this is just one form of structure. The next form of structure that we can play around with is maybe not the engulfing, but we have a set of basing candles. So the market's coming down, coming down, coming down, and there's a set of basing candles here. And then the market hits there and then decides to push up. So basing candles are good, but then with sometimes, the basing candles are all messed up and they may look like this and they look like that and then look like this and stuff. And then the market decides to go. Sometimes it can be all over the place, right? And this kind of structure here, big no-no. All right. If we get good structure, when we've got market like this, we've got like this, we could even have a big candle up here, but structure is good and the market decides to push down, we need to make sure that at the end of the day, that if we are going to factor this in, then we need to factor that wick into the short as well when the market decides to come back into the zone. Okay, so don't just do this as your zone. You have to factor the whole thing in when the market decides to return.
A true shinobi does not set out to seek glory. They protect from the shadows. That is the mark of a true ninja.